Good morning, everyone, and welcome to the morning market review. Today is Friday, it's the 24th of February 2023. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. Just going to bring up some disclaimers. So the first one would be our high risk investment. You guys can excellent. All right, let's bring up the market commentaries. And, I'm going to keep this on screen. The real rate. Look at the DAX. I want to take a look at the PCE, core PCE, which is due out today at 1:30 GMT. So at 3:30 ZA, 1:30 UK, we're getting the core PCE. Be very careful there. It's going to be volatile, and I would expect that the core PCE is going to be very much affected by the median. Okay, so you can see that the CPI median kicked up, whilst PCE uses a basket of goods, and one uses businesses. They are very closely correlated. This median measures the stickiness that's up, and I wonder if that is going to be a an effect when the PCE is released. Can you guys hear me now? I've taken off the headphones. Can you guys hear me now? All right. I'm having all sorts of issues with the with headphones and microphones. Let's just keep it as is. So the idea here is we're going to get the core PCE. We're going to get the core PCE out at 1:30 p.m. UK, 3:30 ZA, and I'm just wondering if the this median CPI is going to have an effect on the PCE. Just want to go through our references. So we're going to be using Market Scope, and we're going to be using Trading View today. Yeah, okay, so let's just use this this microphone. Let's go through to the PCE. All right, so this is core PCE, and you can see that's coming down. If I have to put in a trend line, the trend line is moving nicely down, isn't it? And just change that color to red. So you can see the red trend line is moving down, and you've got a peak, trough, low, peak, low, trough. It's moving in the right direction. It's trending down. And if you take a look at the rate of change, okay, so this is acceleration versus deceleration. It's decelerating. It's gone under zero. As long as we stay under zero here, the core PCE is going to continue to come down. That's what we're going to have to see after the core PCE gets released today. Now, I just wanted to show you, if you go back through to 2019, here the core PCE decelerates, it's under zero, okay? Here, you can see that the core PCE is coming down, so that deceleration is what we needed for it to come down. If you extend it over to this point over here, okay, you can see that it comes down. Now, of course, this is the pandemic, okay? So, but the point is, when we're under zero, and if we maintain under zero, then the core PCE comes down. Very important point. We want to measure that. We're going to have to take a look at that on Monday. But what happens if it ticks up? Remember that the median has ticked up. if the median has an effect and we see it ticking up, so I'm just localizing here to this area here. You can see it ticks up. That's going to rattle the market. This is going to, if we get a tick up in the acceleration, it's going to rattle the market because we'll get a tick up here. But the idea is keep an eye also on the peaks and troughs. As long as we have those lower peaks, lower troughs, okay, lower peaks, lower troughs, we're moving in the right direction. And not going to move in a straight line. It's going to zigzag as well. But that doesn't help us with the volatility. There's going to be volatility that kicks in as soon as the number is released. Okay, so again, I just want to reiterate, keep an eye on this. This is a rate of change. Let me just show you the settings here. Settings, we're looking at a rate of change of 12 months. It's a rate of change on a rate of change, which is effectively what we call acceleration. It's a second derivative. Okay. Any questions around that, type those in. Now, the next chart I want to look at is this chart over here, which is the real rate, okay, versus the DAX. So real rate versus the DAX. And I want to just, we're looking at a weekly chart. And what I want to show you guys is that if you go back to the middle of 2021, okay, it has a negative correlation. So you can see it has a negative correlation. Let's just put in an arrow there. There's my arrows here. Okay, you've got a correlation here, right? But it's an inverse correlation. What does an inverse correlation mean? It means as the real rate moved up, the DAX moved down. Okay, as the real rate has moved down, okay, the DAX has moved up. So you can see that's what I mean by an inverse correlation. Now, the obvious question is, but wait a second, the geography here is off. We're looking at the US real rate versus the DAX. That's okay. It makes a certain sense. The real rate is a general proxy for risk sentiment. Risk sentiment's global in nature. When rates are moving up, okay, there is, it's basically telling us that the discount rate is moving up, means risk is moving up. Risk assets are going to get pushed down. So we're using it as a general proxy. It makes sense. Now, what's the big deal about this is when we take a look what happened yesterday, we get something very, very interesting. Watch this. Let's take out all the these lines. I'm going to kill the correlation coefficient. We don't need that. And we're going to go down to the daily chart here. Okay. Just want to put this on logarithmic for the trend line. I'm going to draw in a trend line. Okay. So during February, the real rate has really been accelerating. And if I draw in an uptrend line, you can see the acceleration or the momentum is really defined by this trend line. The trend line doesn't measure the trend, it measures the momentum of the trend. It's a very steep trend line. We've seen the real rates really steaming ahead, and the reason that they've been steaming ahead is because of the data that we've received. We've got 517,000 jobs effectively created when we got the non-farm payrolls out at the beginning of the month. That really set the real rate in motion, started moving forward. Then we got that CPR. We've already seen that the median CPR is kicking up. That kick up in median CPR, okay, well, that's very much one of the reasons, one of the factors that we're getting the real rate moving up. Now, when we looked at the weekly chart, there was that negative, that inverse correlation. Well, that's been the fact that we've got this kick up in real rates, the fact that the real rates kick up has really been a headwind on the DAX, and that the DAX has actually done relatively well. It's moved sideways. February has been all about consolidation for the DAX. Now, what happened yesterday is very interesting. Let's zoom in, and you can see, let's bring in another arrow here. And you can see that the DAX over here, okay, not the DAX, I beg your pardon, the real rate over here has actually started to break down. It started to break down through this momentum line. It's not breaking its trend. That's not what I'm saying. But what I'm saying is that the momentum, I beg your pardon, the momentum is breaking down. The momentum is starting to wane. And that means that if the momentum is starting to wane in the real rate, well, we may see a kick up in the DAX momentum. That momentum in the DAX is effectively going to be something that may benefit. Whereas from the beginning of February, the real rate has been a headwind. If we start seeing the momentum coming down, it actually turns into a tailwind, starts picking the DAX up, okay? And we've seen that in the time value of money calculations. Now, let's just bring up this chart over here, which is the market scope. And I want to take a look at this chart over here. You can see that the weekly DAX is actually in an uptrend. It's got a reference trough, a reference peak. We've got a higher trough, higher peak. Okay. Now take a look at the candlestick. Take a look at this week's candlestick. This is a very interesting candlestick. It's what we call a dragonfly doji. And what effectively has happened here is that bears have pushed the price down, okay? But the bears have effectively lost control at the low for the week, and the bulls have taken over, and the bulls have pushed price right back up. So it's the bulls that are in control at the moment, just based on this dragonfly doji, right? Now, it gets a little clearer when we take a look at this on a daily chart. So let's take the arrow out. I'm going to go through to a daily chart over here. All right. And what you can see here is something very interesting. On the daily chart, the DAX has been moving sideways for the month of February. Okay. And you can see that very clearly when we take a look at our when we look at trading, it's been moving sideways. Okay, we bring up market scope again. We've got support and we've got resistance over here. Let's make the resistance red, and you can see that we have been effectively moving sideways. Okay, we've been moving sideways. Now let's add a little bit of depth to this analysis. Okay, let's take a look at not yesterday's candle. Let's take a look at Wednesday's candle. And Wednesday's candle has a lower low. Okay, so in other words, it's got a lower low than the candle to its left. More importantly, it's got a lower low to the candle on its right. So it's making what we call a reference candle reversal. What we needed here is some sort of confirmation, and we got that confirmation yesterday. Okay, there's the confirmation. Price effectively closed above the reference candle's high. Now, what's the big deal about that? There is a big deal in that every time you get a swing, every single time you get a swing, you're going to have to start that swing off with a reference candle reversal. So here's a potential reference candle reversal. Here's a swing. It's not a massive swing, but it's a swing. Okay, if we go back here, this is a beautiful swing here. Okay, well, here's the reference candle, and here is the completion of the reference candle. So here's the reference candle reversal, and here's the swing. Now, if it was as easy as that, of course, you know, then we would be making money day in and day out. But it's not as easy as that, because there are reference candles that fail. So here's a reference candle, doesn't really get very far. Here's a reference candle, doesn't really get very far. So we have got this reference candle. Now, whether it takes us out of the resistance or not, we're only going to know after the fact. But we would not be able to get out of the resistance area, out of this. We wouldn't be able to overcome resistance without a reference candle. Well, we've got the reference candle now. So that lays the platform for the attack on the overhead resistance. So let's just put everything together. Okay, we've got a situation where the momentum is coming down. For some odd reason, I can't pronounce it today. Momentum is coming down, and that's now theoretically acting as a tailwind for the DAX. Okay, and it's acting as a tailwind just as we've got this reference candle reversal. All swings have to start off with this reference candle reversal. Well, we've got it. It's now all about if the bulls come to the party and really are able to take out this this overhead resistance. Now, again, we go back to the weekly chart here, and we've got that dragonfly doji. Okay, we've got the dragonfly doji, and by and large, it's all looking very positive. What is the risk? Well, the risk is this guy. The risk is this guy, core PCE. The core PCE, if it comes down, okay, then I think the risk markets are going to go. But that's a big ask for it to come down because we've got this tick up in sticky inflation. And that sticky inflation is going to be reflected both in CPI and PCE. There's crossover, right? So the idea here is keep an eye and see if we are coming down. If we're coming down, we want to make sure that the acceleration here remains under zero. We don't want to see that acceleration kick up. If that acceleration kicks up, then the core PCE kicks up, then the volatility theoretically, and I would expect, would act against the DAX right at the time when it's got a perfect platform to attack resistance. But think about it this way. If it fails at resistance, it's failed the fourth time because it's actually it's attacked resistance 3 times. Let's go back to the daily. It's attacked the resistance 3 times during the month of 1, 2, 3. Actually, you can say perhaps 4 times. Yeah, it's attacked it 4 times, and each time it's been rebuffed. So very interesting where we are. There is a suggestion that part of the rally in stocks was the unwinding of short positions. They're looking to add shorter gains, so the PC risk may be their opportunity. Yeah, I've heard that theory. The unwinding of short positions. I have heard that theory. I don't buy into it at all because you've got a trend. You've got a reference trough. You've got a reference peak. You've got a higher trough. You've got a higher peak. So you've got a primary uptrend. So I've heard that about the unwinding of short positions. And whilst it may be too sort of on a macro level, I think there's something bigger happening on a macro level. But it comes down to that core PCE. By the way, if it is all about short positions, they're playing an exceptionally risky game because if that PCE comes in lower than anticipated, there's going to be a squeeze. Okay, they're going to run for the exit, and then there's going to be a massive shoot up. So it works both ways. So the idea here is that yeah, there could be some short positions. I think you're playing a very dangerous game trying to short into momentum. So we'll just have to see how that plays out. I have heard that theory though. I just don't buy into it. Talking heads, wishful thinking by those that are burnt. Goody, there might be something in it, you know. I just don't see it. And in fact, when we looked at the accumulation, so if we looked at the accumulation, there was distinct accumulation, although it has, I must admit that accumulation has come down somewhat, but it hasn't come down to the point where it's showing outright distribution. So we are sitting in a very interesting. We are sitting in a very interesting point in the market. It's kind of like, if we get a pullback here, is it really that serious? Because we're just in sort of a corrective mode. So I'm not sure I buy into it, but I could have egg all over my face. And then, you know, you'll say, Russ, I told you so. So we'll have to just wait and see. The market's open. Let's just see how the DAX opens. Okay, so it's starting off with some blue. The cash open. It's right on the central pivot here. Okay, it's right on the central pivot here. I would expect, by the way, that there might be some sort of muted type of action before the PCE comes out. I think that PCE is really where everybody's focusing at the moment, and everybody's very nervous about it. So let's just see how that number comes out. I just want to end off by reiterating. Guys, keep an eye on the acceleration / deceleration here. Okay, what we're looking at is the core PCE. Okay, this is actually, so we're looking at the year-on-year change up of core PCE, and then we're taking a rate of change of that, which is effectively acceleration, deceleration, and we want to see if it can maintain under zero. If it cannot maintain under zero, then good deed. I think we do see a number of short positions come onto the market, and we could see significant downside then. It's really going to be interesting when we get the number out. All right. Any other questions? Go ahead and type those in, guys. Anything else? Go ahead, type those in. I'm sorry about the sound at the beginning. I thought that the headphones would be better. Alas, I was foiled. All right, let's wrap up here. Guys, I want to wish you a good day. Be careful over the core PCE release. Have a good weekend, and we'll catch up on Monday. Thanks, guys.